Facebook and Instagram shut down, do changes in mortgage rates even happen? Well, it turns out they do. And this is Ryan Hillard with Forward Mortgage Group. We're talking about what's going on with rates and the market rate forecast for the week of October 4th, 2021. All jokes aside, we do know that rates have been moving up just a little bit, and that's what they continued to do last week, so no real surprise. But again, I keep wanting to emphasize the fact that rates are not moving up in big steps right now. They're moving up just like little tiny baby steps, and it's just more of an increasing trend, an increasing pattern that we're seeing. I have had a lot of conversations with people about this more recently though, because it seems like there's a little bit more what I would call fear in the market, which is an overstated word to be sure. And the fear is just like, well, what if rates get high? Let's keep this in mind, that rates are still in the very, like I would say, high twos, low threes, and very, very good. So it's still an excellent time to purchase a home with low rates. It's still an excellent time to refinance if you're already a homeowner. And just to provide even a little bit more perspective on where rates are, when we look back, we've already seen rates around here recently, as recent as this summer. This is what rates look like somewhere in the middle of June, and is also what rates look like somewhere around the end of March and early April. So we came through that just fine. Again, there's no reason to panic about these rates going up. They are still ridiculously low. I always like to say you're basically being able to borrow hundreds of thousands of dollars for the equivalent of what you can probably get on an auto loan, and in some cases maybe even better. So that brings us to, what are rates going to do this week? How's that looking? And this week is generally anticipated to be a little bit more volatile. Again, just a little bit of a bumpy ride, right? And so we don't really know where rates are going. They're still trying to figure out what their boundaries are and how to operate within those means. So as we do that, the beginning of this week will be a little bit more smooth. And then as we get to the end of the week, that's when we'll expect a little bit more volatility. The thing that is creating that volatility will be the jobs report that comes out at the end of the week. So if we get strong jobs numbers, then that is what would most likely lead to a little bit of an increase in rates, or continuing to push rates up in the trend that they have been moving right now. In terms of what's affecting rates, well, we just talked about the jobs report, and then what would any of these updates be without talking about the Fed stimulus? The Fed continues to buy treasuries and mortgage bonds, which helps keep rates low, which they are very low right now, so no worries there. But as that rate creep continues to happen, one of the things that's moving it is as the Fed prepares to reduce the amount of bonds being purchased, which could happen as early as November. So those are the things we're looking at. If you are out there, again, if you're thinking about purchasing, great time to do so. I love the fall market personally, and if you're thinking about refinancing, please feel free to reach out to me. Would be happy to help you. Hope you have a great week.